Hello listeners, and welcome to the Montel Weekly Podcast, bringing energy matters in an informal setting. Today's pod takes a slightly different format. During Montel's Green Week, I hosted a webinar session on carbon, and we decided to put this out also in the podcast format. I hope you will find the views expressed by the panelists interesting and illuminating. Enjoy the longer than normal episode. So it's my great pleasure to welcome three of the leading experts in the field to the panel today. So a warm welcome to Ingvild Sørhus of Refinitiv.
Hi, Richard, and thanks for having me on this Green Week.
Always a pleasure, Ingvild. And then we have Ferdinand of Greenfact and Bernadett Papp of Vertis. A warm welcome to you all. I think I'd like to start by looking at recent announcements or policy proposals from the Environment Committee, also known as ENVI, in the European Parliament. Marcus, if I start with you, it's clear that MEPs in the Environment Committee, they want greater ambition, they want tighter targets. What do you make of this target of 65% cut in emissions compared to 1990 levels? Is it realistic?
Well, I think before we start about talking about like 67%, I think the important point to make here is that kind of in ENVI, it seems that there is still two kind of versions of compromise amendments circulating, right? So, Rapporteur Peter Liese from the EPP, who is steering this file through the Parliament, is I think still leaning towards 61% reduction, which is in line with the Commission proposal. There is lots of differences in terms of how to get there and in terms of how the actual details should look like. But I think this is still the rapporteur's position. And then there has been a coalition formed by more progressive political groups, including the SD, Renew, Greens, and the Left, who actually pushed for the 67%, which I think, in a way is not too surprising looking into where these political groups come from and how they have argued in the past, right? So all of this is still up for debate. I mean, there's going to be a vote scheduled for Tuesday next week, 17th of May, which happens to be a holiday in Norway. So I think we're still probably in front of our screens there. But that vote is going to be relatively tight, I would say, in terms of the ambition levels, in terms of which of the alliances actually is going to get its views through. And it's by no means the final position, right? So in the end, this ENVI, so the Environment Committee's position is then going to be voted again in the entire Parliament's plenary, which is where you have slightly different let's say, streams of thought, probably who will still try and amend the version that has been discussed so far. And this is scheduled for June. So, I mean, this is an important step next week, and it will probably also have the possibility to impact prices and market kind of reactions. But there is some way to go before this then becomes the final Parliament position. And I think we can dive a little bit more into the details, kind of allowing Ingvild and Bernadett also kind of some thoughts on what they think about this.
Absolutely. So what are your thoughts, Ingvild, on this ENVI position? Is it likely to pass? Will the member states agree on such a tight target?
I think kind of as Marcus say, it's it's an important step, but it's far from the final step. It's we've seen previously for instance, the phase 4 reform that things were changing quite a lot from ENVI to the plenary session. So I think, but it's quite interesting that you have the support for 67% because that's quite more ambitious, and you're really kind of going to the. The Parliament had kind of initially a stronger 2030 target. Or wanted to see higher ambition for 2030 initially before kind of you managed to agree on at least 55% target in the end. So this seems to be kind of the back door to be able to kind of do the at least 55% for the whole climate ambition. But again, also you have because the whole Fit for 55 package is kind of this puzzle that you need to fit all the pieces together. And of course, you're talking about the ETS too. Kind of there has been quite a lot of resistance towards kind of the ETS for transport and buildings. And of course, if you kind of loosen the ambition, or that might be the result if you kind of go step away from ETS for buildings and transport, that you kind of get less climate reductions from these sectors, and that needs to be then compensated in some other sectors. And of course, then you're looking at ETS to take more of the burden that is kind of then weakened on the other end. But I think we have high prices now for ETS or the existing ETS. So of course, it's not going to be an easy ride to get kind of a higher ambition. I think both for in the plenary and not at least for the council or for the member states, that might be kind of tricky to get kind of agree on a higher ambition. So it depends a bit I think it depends a bit on the whole package. If you're loosening some other ends, you need to kind of compensate that in some other areas of the whole 55 proposal. So it's going to be very interesting to see, and I think it's quite interesting what we see has come out now, and as Marcus says, it's kind of two versions that's been kind of circulated now. One with, for instance, Petter Lise's document, where you see kind of no rebasing, but a steeper linear reduction factor. And then on the other hand, quite kind of a steep linear or kind of steep or large rebasing, and then less steep linear reduction factor, which is they're quite diverging quite a lot from the Commission proposal, both these two elements, I would say.
So Bernadett, let me get your views here, because there's a lot happening in Brussels and, across Europe. Governments are trying to cut their dependency on Russian gas, but at the same time, they don't want to see energy prices increase even further. So what are your views on what's happening in Brussels at the European Parliament level?
Yeah, I would like to connect to both what Marcus and Ingvild said, but also bring in a slightly different perspective. Because Marcus said it very well, that these negotiations seem to be still at very initial phases. So we have different versions, different proposals on the table, and these have to pass several other rounds of votes. So what we have seen yesterday is just an agreement within a small group of the European Parliament, but they have to vote next week. Then the European Parliament plenary votes in June, and then the co-legislation process can start with the member states and also with the approval of the European Commission. So the final form of the reforms might look quite different from what we have seen, for example, yesterday. What is sure, and what, for example, our clients can also see, is just individual headlines are already increasing the price volatility in the carbon market. And I think this is something that we have to live with also in the upcoming months. So this is something I think that we have to emphasize here. On the other hand, from the compliance entities perspective, I think that it is, despite the proposal of a higher ambition, that I think was really not a big surprise, as Ingvild also mentioned, because the European Parliament was always in favor of a higher ambition. But I think what is comforting for the companies in Europe, that they see a kind of a continuity in the legislation. They see that the European Union did not give up on the green ambition, despite the very challenging circumstances, as you also mentioned, Richard, with high gas prices, electricity prices, issues with supply chains, getting raw materials, etc., etc. So this legal certainty gives some kind of hope also to the companies, that they might also get the support, either in the form that the reforms respect their challenges they face currently, or they receive other kind of support, like I'm thinking of financial support to modernize or to decarbonize their businesses, because governments and policymakers recognize their current situation. What I can report you from our client side, interestingly, they are not keeping an eye on the big picture, like how the cap would be modified, what the linear reduction factor would look like until 2030. But they are focusing on, let's say, some smaller points of the amendments that affect their business. For example, the free allocation and the plans to phase out the free allocation for industrials. This is something that they feel as important because it is an indirect subsidy, let's confess, for industrials that have difficulties right now in their businesses. Also, CBAM is a focus that is also related to the free allocation. Plus, there are sectors like, for example, the ceramic sectors in Portugal, Spain, and Italy that see an opportunity in the CBAM to receive protection from foreign competitors. So these are quite interesting. Of course, I also have to say that they keep an eye on each amendment related to the speculative activities. And last but not least, we are also contacted by many shipping companies from the maritime sector that are interested in how the new rules would affect their business. So we have a different perspective, I would say, quite a practical one, but we also keep a close eye on the developments.
I'm sure that we will touch on some of those issues later in the discussion, but if I could turn to you as analysts and ask you about your price forecasts. Now, I can understand it's quite a difficult business to be in in this highly complex and ever-changing world. But what, Marcus, do you think are the key drivers that you think that market participants should keep an eye on in the coming weeks and months?
Yeah, I think we have started to discuss probably one of the most important ones already, which is the policy process, right? And I think and just to add on what we said before on this one, I think one element that we kind of didn't touch upon yet is the proposal on the MSR, which I think is crucial as well to understand like how the market is going forward. So maybe let me spend very quickly on that one before I move to the price drivers. So I think the MSR proposal is a very interesting one because it deviates obviously quite a bit from the Commission proposal, which in a way foresaw kind of the thresholds to remain constant at 33 and 400 million tons, adding like a buffer level, right, an upper buffer level. So the compromise amendments, so both versions actually seem to want to lower the thresholds to where the upper level would actually be reduced to 700 million. Which obviously has huge consequences in terms of how the MSR is going to operate. And then there is a plan as well, kind of manifested in the proposal that's going to be voted on next week to actually reduce the upper buffer level in line with or in relation to the cap. I mean, to me, it's still unclear on how this exactly will look like because I think the wording there is not 100% clear, but it would kind of result in the upper threshold to actually reduce quite a bit, which I would say would kind of push the MSR from, let's say, a bit more of a kind of a mechanism sitting in the background as it was planned by the Commission proposal to kind of a more active market stability element again. And I think that's quite crucial to understand. I'm talking about all the details as well, obviously, but this is going to be very important for the market to kind of watch. Besides all of the other elements, which, I mean, the whole process is getting inherently complex. I think this is something to acknowledge as well. So even analysts like us who have been dealing with this market since quite a few years get quite some difficulties in terms of understanding what all of these twists and turns are these days. So that's why kind of watching the key lines and the key developments, I think, is super important. When it comes to other price drivers, I mean, we've, as I said, we talked about the policy part, and we can probably pick up on that again, if of interest. But I think obviously the other elements to watch are the geopolitical situation. I mean, there's no doubt that everyone is talking about it, so it's probably boring for this this setup, even though we obviously have to acknowledge kind of all the cruel things going on in Ukraine at the moment. I mean, this has some implications for the huge implications for the energy markets as well as carbon, obviously, because there is a very high-priced energy complex, which kind of pushes coal into the margin big times, as gas prices are still sky high. And this is a situation to prevail. We have relatively, like in combination with that, we have relatively low hydro reservoir levels, which kind of make it a bit difficult in a way to react from that perspective. And I mean, the prospects for kind of filling these reservoirs as well as the gas storage levels are, let's say, rather gloomy. So I think for this year we have to accept the fact that this market is going to be in a very high price environment. We will see probably emissions rise compared to what we've seen last year again, because we have more fossil demand, and we have in a way a lot of let's say ad hoc decisions on the policy side in terms of securing more gas supplies, more LNG supplies coming to Europe, and at the same time seeing industrials facing a relatively difficult situation in terms of securing the gas supplies and in a situation where the macro situation or kind of the economic situation for these players is deteriorating, right? So in a way, there is a lot of different dynamics at play, and it's no news to listeners to your podcast or this webinar, but this is like where carbon in a way has to place itself. So in a way, politicians doubling down on the carbon agenda, or the low carbon agenda, I should say, on the renewable agenda probably. But at the same time, this will take some time to kind of, in a way, bear fruit. So in the meantime, we have a short to midterm situation where there is a lot of chaos in the markets, right? And carbon is in the middle of that.
Yeah, I mean, so if I'd like to continue in that vein and ask you, Ingvild, about the flight from Russian gas, or Europe weaning itself off the imports of Russian gas. Now, what does that mean for carbon markets?
Yeah, if I can start on the short term first, I think we have kind of seen it quite change in dynamics, because as we don't have sufficient gas in the market with kind of, I mean, it started already when Russia was sending less gas to Europe last year, that we didn't have this. I mean, in the carbon market, normally you can kind of do this immediate emission reductions, which is switching from coal to gas, like the fuel switching component of the or as a dynamics of the carbon market. But kind of in leading up to the end of last year, we didn't see much fuel switching taking place, just because there was not sufficient gas to cater for additional demand in the power sector. So, I mean, we had record high carbon prices, but still that wasn't sufficient to trigger these short-term emission reductions that we kind of textbook example that we will kind of switch from coal to gas. And also with the invasion of Ukraine, then we see that kind of the curve for the gas price have kind of just increased. I mean, and by that we have really seen that carbon has lost the anchor of or the anchor in the fuel switching complex. I mean, previously it was using more kind of the front month, and then when it couldn't kind of compete with the gas prices or the rising gas prices, we were moving to kind of the to the year ahead to find kind of the price anchor. But now we probably see kind of tight gas year this year and then also next year. So it's really kind of carbon has lost that fuel switching anchor that we have seen previously, that is at least kind of taking some direction from that. So that's kind of in the short term, and we don't necessarily foresee that will come back anytime soon. So it's really, carbon is in a bit of a search for what is kind of the new price setting mechanism for carbon. And then, of course, then you're looking at more kind of long term and kind of the abatement cost from the industry sector, like green hydrogen, CCS. That's kind of being more relevant also for the price now. What is kind of the fair price for carbon at the moment? But then again, I mean, of course, we will see kind of these years that we will have more emissions necessarily from the coal burn or higher coal burn. I mean, we're facing kind of less or delay in coal phase out plans. And I mean, we've also seen an extreme kind of situation with French nuclear, and as Marcus mentioned, the hydro situation. But we're also kind of seeing a push from countries and from the European Commission to kind of speed up the renewable renewable build out. And of course, I mean, yes, in the short term, we are looking at kind of more coal burn, more fossil fuels, more CO2 burned in Europe. But hopefully, I mean, everyone sees the urgency to move at a much faster pace towards renewables and kind of a faster inclusion of renewables. So in that sense, I mean, to 2030, we will kind of probably see a more speedier phase out, or at least that's kind of the goal now, that you see the Green Deal with, for instance, increased renewable assumptions, probably will see even higher renewable target proposed by the Commission, possibly also kind of part of the repower plan. That's kind of, I mean, it's kind of, that's the signals that you see is we want to go, or to kind of secure the energy of supply. That's the way to go for Europe. And I mean, even without the war in Ukraine and sanctions on Russian coal, gas, I mean, you see a higher international competition also for coal, gas. So it's really kind of for Europe to be to secure supply. I think that's kind of everyone sees that as an important factor.
Absolutely, you painted a very complex picture, and you know why it's very hard to forecast what all these factors mean for prices. I'd like to ask you, Bernadett, what are your expectations for the coming weeks and months? Are we gonna fall back to 55, or are we gonna go above 100? What are your views here?
Honestly, of course, there is a certain probability for both scenarios. In an extreme case, we might see the price dropping again, although 55 is quite far away, and I don't think that it would be in line with the general ambition of the policymakers. And also, as Ingvild mentioned, the general assumption is that this year and maybe even in the next year, we will see higher emissions from the power sector, simply because this is the way we can secure the energy supply, both for the industry and for households in Europe. We have seen that already last year after the verified emissions report came out in April. And we have seen, there is just one thing that comes to my mind, that not only an increased use of coal, but also increased use of oil. That was quite surprising. And I had a feeling when I first read the news that we were getting back a couple of years in history. But unfortunately, these are the resources we have access to right now. Of course, keeping in mind the ambition to reduce emissions by 2030 and also to reach the climate neutrality by 2050, higher prices will be needed. And we have seen actually in the middle of the war that the price already approached the historical maximum we reached before the start of invasion of Ukraine. So I think that if market participants see the way forward, and this is why I emphasized also in my previous intervention that this political certainty is crucial also for setting the price path in this market, I think that we can easily approach again the historical maximum, and we might see new records in this market, especially as you also mentioned, the volatility is huge. Yesterday, we had an intraday volatility of more than €8. So I think that this opens the possibilities or increases the probability new records rather than new lows in this market.
New records in the coming weeks, or when do you think we'll see these new record highs?
Absolutely. As the negotiations go on several platforms, so both among member states and in the European Parliament until the summer break, I think that this can lift the prices definitely to new records in the upcoming weeks.
What's your view, Marcus? Do you think, are we more likely to see 100 than 55?
I think it's impossible to answer a question like this as black and white. So there is no simple answer, right? I mean, as you already mentioned, it's a very complex picture, and I would say a lot depends on kind of factors outside the carbon market, right? So, like modeling the carbon market at the moment means you need to model in a way the entire kind of geopolitical situation, macro situation, plus the rest of the world in terms of energy demand, right? Which is something that is inherently complex. So I think what we see, and that's what Bernadett alluded to, is that the volatility. I mean, like having a price move of 8 to 10 euros in a day kind of can send the price anywhere, right? So I would say the market at the moment continues to be a bit detached from the fundamental situation. So there is a lot of sentiment trading going on. I mean, when we come back to fundamentals, I mean, what's the problem at hand at the moment? The problem at hand is that in a way we need to see how the EU is able to basically detach from Russian gas imports. So we will see some of that being replaced by LNG, but and probably Norwegian and Northern African pipe gas, some demand side measures and substitutions, probably also with increased coal imports. But in the end, it comes down to having a very tight balance on the gas side. I mean, there is no doubt about this, and I think this is going to be one of the more certain elements in this, I would say. So what we see is that the EU currently finds itself really between a rock and a hard place, right? So it needs to get rid of Russian gas while not causing an even more bullish spiral for the wider energy complex. And this is a very complex one to solve. So, I mean, all of the plans that we're seeing at the moment on the renewable side to speed up these processes, kind of go green everywhere. I mean, this is a process that should have started like a decade ago, probably, in order to kind of bear fruits now, right? So this will take time. I would say that so we are entering the period where I think carbon needs to decide in a way whether it believes more to being positively or negatively correlated to gas. So we've seen with the invasion that there was quite a big negative correlation going on, which was more the fear that it will lead to industrial demand destruction. But I think we're seeing this easing at the moment. So the correlation to gas prices getting more into positive territory again, which could potentially mean that it's more betting on the fuel switch element, right? The one that Ingvild pointed out, where like the non-existence of fuel switch opportunities anymore, which would then be a bit more of a bullish scenario, I would say. I mean, this is kind of I would say determining the short to mid term. In the long term, it's more mixed. So this is where we see an increase in the renewable targets, a significant ramp up plans in new member states. De facto painting a bit more of a bearish picture, but then I guess the interesting bit will be to see how much of the additional RES supplies will be compensated by increasing electrification demand, right? So including green hydrogen, including electrification on the industry side, on other processes. And I think this is where it's getting bigger again with the taxonomy discussion. So here politics play a role again. So what do you define as green? How much kind of renewables do you need actually in order to prove that you're reaching your targets? So all of this will then kind of determine how carbon prices will evolve in the mid to long term. So I would say short term, I'm more bullish than bearish. Not ruling out any dips, to be honest. I think we have seen that levels around 50 to 60 euros seem to be quite attractive from a compliance operator perspective to buy. But that all depends on in a way on hedging strategies and kind of opportunistic buying. And then I guess the upside at the moment is kept slightly below 100 euros with the all-time high. But this all-time high is super fragile. So that would be my very unconclusive kind of view of the markets. I think at the moment it's a lot of a lot of short-term reactions to of the price to kind of a daily changing situation, right? And I think the Repower EU, or kind of the proposal by the Commission, could potentially provide a bit more light in combination on kind of future developments in combination with what we see coming out of ENVI and then the Parliament's plenary. So like these pieces of the puzzle need to fall into place on the policy side. On the EU policy side, this is the area where the EU can actually actively determine the next steps while still being very dependent on what happens outside of the EU.
So, Marcus, will we see €100, or will we see the €100 level breached in the coming weeks?
I think we will see the €100 in the UTS in not too long from now. I would not say this is going to be a sustainable level.
And Ingvild, if I can turn to you, what's Refinitiv's view on where prices are going to go in the coming weeks? I mean, it's clearly a very highly complex and dynamic situation on all fronts.
Yeah, and I mean, we see prices have moved like crazy in some periods of time, and then suddenly it sticks to 80. I mean, so it's really so it's what to say about where carbon price is going. I think I support quite a lot of kind of the bullish elements, or kind of at least the upside elements. Is that I mean, we see kind of more focus now on policy, especially we saw kind of yesterday and some other days that policy kind of statements from policymakers have kind of driven the market, at least intraday. So it seems to be kind of switching. Policy has been kind of a bit in the background for a while now. And I think we will have more focus now once we have kind of the vote in ENVI now and kind of the Repower plan, which is also interesting to see for the carbon market, because in the communication that they put out previously, kind of this 10-page on the Repower plan, they also mentioned kind of possibly kind of front loading of an innovation fund to kind of fund the transition that is needed of Russian fossil fuels at a faster pace. And of course, the innovation fund then that goes into kind of the EUTS. That's kind of part of the EUTS. Currently in the current legislation, that's kind of evenly monetized throughout kind of until 2030. And of course, if you see some proposal on, for instance, the innovation fund to move forward the volumes, that means kind of you will have more supply in the short term. So that's going to be interesting to see what the Commission, if they proposes anything on that, because it was only kind of one sentence in the communications up front. So that will kind of be quite interesting to watch for the carbon market, and that could be at least a short-term driver. I think also kind of for the, I mean, you have quite for a while now not seen any fuel switching taking place. So then it's been all up to kind of emissions have been up to how much renewables do you have producing, how much nuclear. And of course, now we see the hydro situation is getting kind of worse by the week now. It's quite, it's lower than normal, almost across Europe. So it's really kind of, you don't get kind of, that's another bullish element. And in addition, you have this quite bad nuclear situation in France, which is not helping, right? To try to stay off the Russian gas. So really kind of you need to then, so that's, I would say that's kind of a short-term fundamental actually. For policy, it's, yeah, it's, I think the most ambitious position that we will see will come out of the ENVI. But it will be interesting to see how now the different groups and different kind of politicians or member states are positioning themselves, if they're getting kind of more vocal on the ETS, and then of course prices could move on those topics. Another thing that is kind of could be more to the downside is the European economy. I mean, we haven't really seen kind of the full impact of. I mean, we're getting kind of new economic data coming out like gradually, and then of course the impact of the Russian war on European industry, for instance, will kind of probably be more visual in the data going forward. So of course, that is something that could kind of weigh to the downside, I would say. So it's, I think I know you're probably going to ask me about the 100 question as well. And of course, can't rule it out, but I agree with Marcus that don't think that's sustained. I think another thing is that it's a policy risk attached to kind of the 100 mark as well. I think if it kind of just spiral off and goes like 100, 110, 120, I think then it's kind of another element for policymakers that they need to take into account. I mean, they should be detached from the price, right? And also kind of they of course a high carbon price is also generating a lot of revenues. That is the policy makers see is needed. But I think, but I don't see kind of in the short term that prices will kind of stay above 100. Both kind of to the risk of kind of the economic downturn in Europe as well. That yeah.
So they could hit that high, but they won't stay there.
I'm a bit cautious on kind of the 100, at least in the next 2 weeks. I think that's in my gut feeling is that we're not getting there quite yet.
Well, that's very clear, but another element that came out of the ENVI proposal was, wish to limit the role of financial entities in the EU ETS. What do you think? I mean, this has been the role of speculators has taken has been a big topic as prices moved up very suddenly and as prices also crashed in March. Now, what do you think? Do you think that this proposal is likely to pass?
Excellent question, because we have to see that policymakers are under pressure, especially from compliance entities that have, as we mentioned before, different other challenges with paying their gas and electricity bills, to intervene in this regard, because simply we have seen skyrocketing prices since the allowances became financial instruments and therefore also eligible in the portfolios of different financial entities. On the other hand, we also have seen actually 2 reports of ESMA, the Financial Authority of the European Union, that did not find any evidence of misuse or manipulation of the carbon market from the non-compliance entities side. So it's a difficult question, and as you can see, there is no real consensus among market participants either. I think that what we have seen coming from ENVI and also proposals from the EPP is quite a vague wording, I would say. I would like to compare it to Article 29A, because with the interpretation of that article of the directive, we are also struggling a little bit. What prices mean, what are the 3 years in Article 29A, and in the same way, how shall we interpret this short amendment the members of the European Parliament added to the proposals? So I think it will be very interesting to see the final wording and how this comes into practice if approved by all the legislators. And second, we should not forget that even the current proposal contains one little addition, according to which the European Commission should do an impact assessment by next summer. And if this impact assessment would show that the limitations would be counterproductive for the market, for the health and liquidity of the market, then the Commission should propose other options, other solutions this regard. And just from the trading perspective, if I have conversations with my colleagues who are trading on a daily basis, They also say that, for example, even now, if we have days with low liquidity, spreads are increasing incredibly. And this is not good for any market participant. And we have to recognize that those entities without any compliance obligation in the market contribute with liquidity to the market. So if you do not want to see big spreads and big volatility in the market or difficulties to hedge your emissions, then I think that we have to be very careful with these limitations. I'm really curious myself how this proposal develops when it gets through the different rounds of political negotiations.
Absolutely. And Marcus, if I can turn to you here, we've seen some member states calling for intervention and price caps in wholesale power and gas markets. Are there similar calls in the ETS? And is there a greater risk of such intervention from the policy side?
I'll just go back quickly to the spec kind of question first, probably, because I find the whole discussion is just a very simplistic abstraction of what's happening in the market, and it's in a way an answer to kind of a completely different root cause, right? So, I mean, the problem is to quite a few policymakers that EUA prices are high, maybe too high in their view, right? In a way, in order to change these high price levels, you would either have to see gas prices coming down, or hydro reservoirs to fill, or nuclear availability in France to be better. Something that is very difficult as a policymaker in a way to arrange, right? So curbing the participation of speculative participants might actually pour fuel to the fire, I would say. Because in the end, what you do, and that's what Bernadett said, right? I mean, there is a high risk of reduced liquidity and kind of a high risk of, basically removing options to kind of get a fair price assessment. So, I mean, when we look into kind of the commitment of traders reports in terms of, let's say, the non-compliance activities, and especially on the investment fund side, I mean, what you've seen is that investment funds basically reduced the net length from 34 million, I think, over IS and EX to 5 million in the period after the Russian invasion. And that climbed back to around 22 million or so by 6th of May. So what we have seen over the past few months is, I mean, especially after the de-risking following the start of the war in Ukraine, liquidity in the market went significantly lower, right? And this was even without having any kind of political guardrails around the participation of non-compliance participants. And what we see, I mean, we've seen that, I think in 21, there was an average daily trading volume of 30 million or so front deck contracts in IS and EX. And yesterday, with an almost 10% swing intraday, trading volume was at 23 million, which is just explaining the whole situation, right? So removing liquidity from this market will not solve the problem of high price swings and will not solve the problem of the high price situation. And I think this is just very important to kind of to discuss in that context. So this is not really solving this problem, I would say. This position, I mean, my position might change depending on the kind of volumes taken by non-compliance players in this market. At the moment, I do not see this as a risk. When it comes to kind of other protective measures taken by member states, the question that you asked before, Richard, I see that also relatively critical, I would say, because in a way you remove markets to solve the problem, right? At the same time, I can understand that, especially when it comes to protecting kind of low-income consumers, that this might be a possibility for generating some sort of a relief. But at the same time, it will also create new problems mid to long term, because you don't have, you kind of mute the signals to invest in new generation capacities, right? And you mute, in a way, the investor appetite to kind of go for these investments, which, you know, like mid to long term will probably make you running into even bigger problems. And I think this is why it's so critical at the moment as well as policymakers to, in a way, find the right answers, which are not really interfering too much with the market forces. So this could be either on tax reliefs or on additional kind of support for power bills potentially. But I think capping the price kind of interfering with the market force will probably create problems down the road.
I'll let those wise words end this session. So, Bernadett, Ingvild and Marcus, thank you very much indeed. So, listeners, you can now follow the podcast on our own Twitter account, aptly named the Montel Weekly Podcast. Please direct message any suggestions, questions, or let us know if you think you have a good idea for a guest on the show. You can also send us an email to podcast@montelnews.com. Lastly, remember to keep up to date with all that's happening in energy markets on Montel News. You can subscribe on Apple Podcasts and Spotify or wherever you get your podcasts from. Thank you and goodbye.